Good morning, everyone. This is Daily Trading Analysis with a quick market update for today, 25th of October, Wednesday. We got earnings from Microsoft and Alphabet yesterday after the close. And Microsoft was beating expectations, but Alphabet missed expectations on cloud revenue. Mixed sentiment in Wall Street, meaning that basically Microsoft jumped 27% in the net income and EPS neared the $3 mark. Revenue grew year over year almost 13%, and Microsoft Intelligent Cloud segment produced $24 billion in revenue, up 19%. This is what investors were really waiting for. But Alphabet, well, cloud misses expectations. Overall, Alphabet it's reporting really good earnings, 155 on EPS and 76 versus 75. That's good. But in terms of advertising, YouTube has 795 versus 781, barely beating expectations. Google Cloud revenue, that's the miss part of the equation, 8.41 versus 8.64, and acquisition cost 12.6 versus 12.6. So basically, this is the big issue. This is the big issue. And basically, Google Cloud is being compared with Amazon Web Services, AWS, and Azure Cloud. And this comparison it's basically giving Google a bad reputation. It's not getting the attention and the power that their competitors are really getting. So it's falling apart. It's getting behind the two main cloud service providers. And that's really the issue. It's nothing else. When Wall Street misses expectations, it doesn't it doesn't matter what other kind of numbers are, but people were focusing on this, and this was really a big fail. If we check the charts, basically Google, it's dragging the market down. Look at this fall. This is after yesterday's earnings. Today we were in this range of the lows, and then another at the open today, another breakdown. And this is what happens. Minus 8.86% for Google today. It's really pushing. Look at this. This is a huge gap. We are bouncing off another gap, but this is a big deal. This gap, it's unbelievable. And it's really punishing the Nasdaq. I was calling out yesterday this possible bear flag to the downside. I didn't expect Google to miss that much and to drag this market so much down, but we are at a lot of confluences in the buying side. There's this week, there's also this blue dot line that is last week low, and we have also this big demand zone. So a lot of confluences that basically provided support here. But this drop of basically almost 200 points, it's a big deal. It's Google's fault, and I think it's because Wall Street didn't like tech, and it's now rotating to things like gold, dollar, and things like that. So the rotation is there, but we are still very choppy, but we are still in a demand zone. So pay attention. Wow, quick boost. Pay attention to this afternoon, because this level was key. This was Monday's open into the squeeze. This level, I had it charted, the opening print on Monday, And look at where we 14,602, 602 provided the best support today. Look at this tab. Down, consolidation, round down, and all this area, it's basically accumulation. This is Wyckoff theory, and when you have this kind of accumulation, you usually have these kind of traps and then a liquidity boost. So this technical setup, it's quite powerful when you are coming from this kind of sell-off. I don't know if it will end up getting high of days today, but this accumulation has two important things. A Wyckoff local trap for shorts, and then the overall demand on the high time frame, in this case the daily. All these people are also accumulated. So the low time frame buyers, like the ones that bought the dip down here, are being supported by the big guys, the big participants that demanded, that bought the triple bottom on the daily. So for me, this kind of confluence of levels and demand zone, it's quite bullish for a move like this. It's a high probability trade that I will for sure take every day. I didn't took it because I didn't have I didn't expect that, and I was doing other things, so I missed this. But once I saw it, I can clearly say that this is a really decent trade for a reversal today. All these guys are quite short. We tried one time, we failed, another tried, we'll squeeze them big time. So pay attention to this afternoon. We have the dollar quite choppy today. It's not super strong, but the rest is quite red. Not only tech stocks, but also all the banks are in the red. Small caps are deep in the red and now curling back up. So it's worth following today's tech Nasdaq into the afternoon to see if this resolves higher. This would be, look at this, beautiful. So I think it's worth to basically at least watching the market today, these kind of things. And the first level that I will be watching is this one, and we are tapping it. Let's see what happens. But be patient, because these kind of trades only happen once in a while, but they are pretty worth in terms of ratio. Look at all these candles. Look at all these wicks. All these people, all the people that was short here is going to get squeezed. Let's see what happens. Anything can happen, but this is a pretty good setup. The other thing that I would like for you to pay attention is the inverted yield curve. I was mentioning this from a long time ago. We are an inverting push, drop, another push, and the consequence of this is that basically the recession is going to be called out. Being this quarter, Q4 2023, or next Q1 2024, that's going to happen. Because basically what is happening is that the 10-year, it's pushing more than the 2-year yield, making this inversion reverted. And when that happens, it's not only the zero line, it's the continuation to the upside, the uninversion. The uninversion of the yield curve that will be causing a lot of pain to the markets, because that would mean that the Fed is cutting rates and the 10-year yield is again providing more yield, more performance than the shorter term. And we are probably in a sick economy, and something has broken. So pay attention to that. It's continuing pushing. The 2-year is in the red. The 10-year, look at this, it's continuing pushing higher. This is out of any kind of equilibrium. Not even this channel is following the performance on the 10-year yield. it's flying. So that's putting a lot of pressure on stocks. But there's plenty of investors willing to buy tech stock down here. So this is a pretty good spot to buy long term, perhaps, things like that. But for day trading, we got our opportunity for a nice, at least, move towards VWAP or pre-market low. So that's my target. Watch the market this afternoon. We might get a huge squeeze through high of day into a potential big move to the upside. Let's see what happens. We are at a big demand zone, and the confluence between these daily investors and also the participants that bought the dip may provide us with a nice ratio on these trades. So that's all from my side. As always, thank you for your time. If you found this video useful, please give it a like, subscribe to the channel because I upload videos every single day for market forecast, market updates, and market recaps. So stay patient. Today we got a nice move to the downside and something is sneaky. I have a feeling that something is being cooked in and we might get some beautiful trades into the afternoon. So stay tuned. And let's see how we end up today in terms of expectations. We are waiting for today's Meta earnings after the close and tomorrow after the close. So big things still waiting in the lobby for us this week. So stay safe, everyone. Remember that discipline and risk management are key for success. See you tomorrow.